Here's a fantastic example of a price discovery continuation sell trade taken on Friday, the 26th of June 2026. For the majority of Asia, since the open, price had been bouncing back and forth inside the volume profile zone, underneath the upper value line, and between the inflection point and the point of control, which is a very balanced area of price. Orders are being manipulated on both sides of the market, and there's no sort of direction. But as we come into the new hour, so this is the 12 p.m. hour my time, price slowly starts to once again make its way down to the value area low and the inflection point. We have these hourly lows left over from the New York session and the big psychological level, the 4,000 on the spot chart that I'm looking at the moment. And playing this forward, there are a number of options. If price comes down here, we look for a price discovery breakout, but only on a key bar. So if this high had been taken and we were there, I'd be looking for a sell to come out to trade into this psychological level to take out these lower levels. But although it did break out, we didn't have that key bar, which I'm looking for. So I just had to stay patient. And price continued to move on, and it could have kept on going without me. We had a key bar up here after taking out this hourly low. And then we get this very strong rejection. So prices come in and backtested both the IP and the value area low. And so here we have this key bar down that's rejecting the inflection point and the value area low. We are looking for this price discovery continuation to hopefully break through the 4,000, because we never know if that's what it's going to do. But we've already sort of rejected this inflection point fire line. We could definitely see price come down to this lower value level, which makes a lot of sense now that there's had this balanced price action and there's actually now a decisive move. So really, the first two things I need to do is, one, just check the average true range over the past hour on the previous candles. That gives me a value. So that was sitting at 55. And then I just take a 1.5 calculation of that. So we just get a calculator out, 55 times 1.5, so it's 82. So that would be my stop. So I'm bringing in that. So we're sort of just above the high here. And I also look to see if there's any fair value gaps that might also help protect our trade. If price was to come up, just sweep this high, which it shouldn't do, because that's the reaction that we're looking to trade off. But I can just have my emergency stop up here. And if price starts to really build strength, then I need to just get out. So we're looking at an 82 risk, and we'll go look to put the trade on now. So we're selling, and we'll have a stop. So we're getting in somewhere around about 4,001. And take profit will be 390. And our stop will be 4013. So our sell stop's on. We'll have our protection stop there, and we'll put this down there for the moment, but looking for that, just that 1-to-1. We'll let the market decide what it wants to do. So immediately triggered in and hit our 1-to-1, but we've had a nice close down. So really, we don't want price to be coming all the way back up here anymore, so we can move that down into that high, and we can start to sort of go, okay, well, if that's our 1-to-1, we might sort of move this up here a little bit. It's looking good. Oh, a little bounce, very, very close. Beautiful. And that's, so if you're sort of more of a trader that likes to swing a little bit longer, you can just see if you can trail your stops. Now you've had this beautiful sweep and very, very strong close down. Otherwise, if you've sort of moved that in, you've got your 1-to-1 good, then your trading could be done for the day.